Well, as they say on Union Budget Day, don't make the verdict immediately after the budget, not even 15 minutes after the budget, perhaps not even 1 hour after the budget. And sometimes the devil is in the detail, and the market right now has slipped. And how? Just look at the intraday chart on the Nifty and on the Nifty Bank. On the Nifty, we've fallen about 500 points intraday, and on Nifty, we've fallen about 130 points. So the classical resistance for the market for the 980 has once again come into play and has taken the market lower. Last hour coming up, of course, could be very interesting. I've got Surbhi with me. Surbhi, hi, good afternoon.
Good afternoon, Anuj. I was speaking to a chartist who was telling me that last 4-5 budgets, the budget day has signaled either a market top or a market bottom. Yeah, last year we remember LTCG that became the top. I'm just hoping that that's not going to be the case this year. What is your sort of first thought on the day?
No, look, every year is different, Surabhi, and last year was different because, you know, we had a trending market, and in a trending market, we had made a kind of move. Previously also we had trending market. This time we have not had a trend for the market. The only trend is this 10,000 550 holding on the way down. Remember, we were talking yesterday that don't get too excited, don't extrapolate,
that 150-point rally.
That 150-point rally,
yeah.
And, add today's move as well. I think there's some clarity we need on this. Head Education says. I think we'll soon have some clarity on that. I think the market, initially, all the consumption stocks surged because of this 5 lakh income tax exemption.
Yeah.
And then you extrapolated that to, everyone benefiting. But the fact is that it's only going to be those earning up to 5
lakh rupees.
So in that case, that led to this, this rally also seeing a bit of a fatigue. And, as technicals would say, at the end of the day, triggers will come later. The market's basic premise of buying at 10,550 and selling at 10,980 is intact. Also, Surbhi, I think what hasn't helped is that SBI had a big rally going into the numbers. That has seen a big decline after the numbers. In fact, now down 3% on that stock. And I think the market's fearing something about ICICI Bank because you remember that rally got punctured only to make a comeback. A day ahead of results. Yesterday, the reaction to results was very interesting. On ICICI Bank is the stock that we're talking about now. And on top of that, it's down 4% today. That I don't think has got anything to do with the budget. So and the market has looked at the budget, reacted, and is ready to move on now. And let's see, for now, back into that range.
And back into the red on the mid-cap index. Nifty Bank is now down a whole 250 points, almost 250 points. And the Nifty barely holding on to the green by the skin of its teeth as we speak. Okay, let's take this conversation forward. We have Aditya Narain, Head of Research, Institutional Equities at Edelweiss Securities, as well as Hiren Ved, Director and CIO at Alchemy Capital Management, joining in. Gentlemen, good afternoon. So the budget has come and gone. Right now, the market is choosing to be far more cautious than where we were at around 12:30. Aditya, your first thoughts?
So I think it's actually a fairly well-balanced budget. I think you have a consumption push. I think the numbers have, by and large, been reasonable in terms of the assumptions. And to some extent, I think this is a kind of budget where the push that has come, I think that's unlikely to be rolled back, irrespective of which disposition comes to power. So I would actually tend to believe it's a reasonably balanced budget. I think the markets reacted on one side and then the other side. But I think in terms of its overall balance, actually, I'm quite impressed with it.
Okay, big decline now on the Nifty Bank. In fact, if you see 600 points and counting from the high point now. Hiren, good afternoon. Your thoughts? There was initial euphoria, and now all of a sudden we're talking about a market which is down 300 on the Bank Nifty and has lost all the gains on the Nifty front.
Yeah, I think, usually on a day like this, you do see great intraday volatility. But I think on the whole, the budget is quite reasonable. I think, there's nothing which is very surprisingly negative in the budget. I think there was an expectation of a farm package. There was some expectations about some relief to the middle class, and both of that have come through. And I believe that it's happened in a very smart and measured manner. So, at least I don't see anything which is significantly negative in the budget, though we will have to see the fine print and see where the resources for this will be generated. I believe that there are certain assumptions for, GST and tax revenue, which will have to be studied in detail. But I think on the face of it, the budget looks pretty reasonable.
Okay, by the way, aside of budget, just keep an eye on DHFL. That's 25% circuit down now. And the market is now really perturbed by what's happening here. 25% is temporary freeze. Looks like one of those days where, it's just gonna, it's just collapsed. That's 22.5% in the spot. In the futures, there's a temporary freeze which happens. You can't sell beyond a point. So there's already 25% which has happened on that one. So let's see. Aditya, good afternoon. So, this whole consumption stocks re-rating. We all forget that, we just see numbers from all the auto companies, right? They have been pathetic. Yes, the monthly sales for January looks quite okay because of the beaten down expectations. But do you think some of these stocks can really make a big move from here? And for example, Hero is up 7%, but that's because of the market positioning. The stock was, at 52-week lows. But autos, do you see a sustainable rally from here?
Yes, I think this push that you've got is much more biased towards the staple side or to the regular consumption side rather than the discretionary. I think there is an element of support for the discretionary side, but quite honestly, I don't think it's going to be enough to turn what is a downswinging cycle for the discretionary spend on the auto side. So to that extent, we've actually been running a cautious stance as far as our portfolio is concerned. This event, provides you some level of support for possible growth and possible stock reaction, but I don't think it's enough to really change our view in terms of our slight caution in that space. So I think it's support, it's leaning towards there, but it's not enough to turn the current downswing that you're effectively seeing in this space. I think what you need to think about is from a more medium or a longer term perspective, I would tend to believe most budgets going forward are going to have a similar bias. And I think that's a different context that you actually have to look at rather than from an immediate implication that if you really have budgets over the next 3, 4, 5 years having this income and this consumption bias, what that could effectively mean for some of these businesses.
So by the way, the Nifty did dip into negative territory. It's just sort of floating around the flat line now. Check out the decline on Yes Bank. It's down about 5.5%, along with a lot of the other big lenders that have been under pressure. Hiren, that's my real question to you, because it was these corporate banks that were pretty much, the pinpoint of this move to 10,950 thereabouts, this approach to 11,000. Now, has something really changed? Because the numbers have been absolutely fine, including SBI today, and yet we are seeing this disenchantment from the likes of ICICI, Axis, and even State Bank.
See, I think we need to move away from the sentiment of the day. I think, the numbers clearly show that provisionings are tailing off for the corporate banks. And, we're seeing a turnaround in their fortunes. And I think that trend should continue over the next couple of quarters. So, I think as far as the, the re-rating that we saw in the corporate banks, I think there was a basis for that re-rating. So I wouldn't say that it was just a flimsy move up. Obviously, on a day like this, as I said, I wouldn't read too much into the stock prices of a day. We'll have to see how the market closes at the end of the day and probably another 1 or 2 days. But there could be other concerns that people might have on NBFCs, etc., which may be flowing through to the overall market. So I think as far as corporate banks re-rating is concerned, I think there is definitely a basis to that, and I don't see a reason why that should change.
By the way, the rally in Indiabulls Housing Finance is also under question now. The stock had a great run from results yesterday. Of course, we spoke to Mr. Gagan Banga, and he sounded quite optimistic, including on the developer part of their book. Right now, there's selling happening at higher levels, even on that stock. Anuj, your thoughts as well on this, because, again, some of these banks, the manner in which the fall is coming through, Axis, ICICI at their 52-week highs without any problem with numbers again.
No, I think Axis, you can leave that out because it had a big rally. I think the news on Yes Bank in the morning about Monde, I think going off opens up another uncertainty once again. And remember the point we were making on Yes Bank on the results day that that was essentially a powerful short covering move which got a bit overdone. And in time, the stock should settle back once again into that 190 range. Yes Bank is the one that we're talking about now. So now 183 on that stock. I think on ICICI Bank, that's the one which has really broken the back of the bank Nifty for last few days now. Yes, there was a one-day rally on the stock, but if you see now we're talking about ICICI Bank. If you see the stock, it's Chanda Kochhar quit, and after that there was a one-way re-rating on the stock. Then you had that CBI FIR which names Chanda Kochhar and the current management of the bank as well, and that's opened a fresh negative. I think that the street is sensing something amiss here. Otherwise, there's absolutely no reason that on these numbers ICICI Bank should have corrected from the levels that it did from 380 to 350. This doesn't look like a normal correction. On good news, when the stocks fall like this, there's something wrong.
Let's watch out for these bank stocks. By the way, let's talk about happier things as well, and that definitely has to be the two-wheeler space today. For instance, if you're looking at a Hero Moto right now, let's get that stock up for you on the screen. It's still holding on to pretty solid gains, 6.5% up on Hero Moto, and Bajaj Auto also doing well. And Aditya, I'll make that my next question. Now, with this farm package of sorts going through, is this just a sentimental bounce in these stocks, or do you think they're finally now near their bottom, given the kind of price damage that we've seen, and actual hope of good rural demand ahead of elections?
I think there are two ways of looking at it. One, from a price bottom, given the kind of dividend yield that they get, I think they do find a certain amount of support. So I think that's one bit, and that really means that these stocks are unlikely to go too much lower. I think the second bit is this enough to spur a very strong demand cycle? And I think you'll be a little bit more watchful on that, and you've got to be a little bit more measured on that. But I do think, as I'd argued a little earlier, that from a longer-term perspective, I think this budget tells you about the way things are to come. That is, you will get much more support from UBI type of schemes. I think it will actually be sustained. And the moment you have consistency of expectation, I think that tends to play through a lot as far as the spend is concerned. So I wouldn't say this is the time to get into these stocks, but I do believe that from a longer term perspective, you are going to see consumption at the lower end being fundamentally boosted. It might come at the expense of investments, and that's something entirely different that you need to look at. But I think the trend will support a lot at the lower end effectively coming up.
Okay, so Hiren, we were discussing this in the morning with one of our guests. Is it back to IT now in the near term for the market? So much uncertainty around so many sectors.
See, I think markets in the short to medium term, moves in, in some sort of sector rotation. I think if IT has to, usually during uncertain periods of time, especially when macro is uncertain and the rupee bias is towards weakening, then people tend to, IT stocks do find favor. But I think, IT per se right now is on an upswing. We've seen the results from the biggies, and those have been pretty good. And I think, the trend seems to be positive for IT companies. These short-term tactical shifts, to say that, oh, now domestic is not doing well, so let's go and buy IT. I mean, these things keep happening in the market. I think what we have to focus on is that, at the end of the day, whether it is the companies or the sectors, it's the underlying fundamental trend over the medium to long term which will drive stock prices rather than tactical shifts, because some area of the market is not doing well.
Hiren, we've spent, the last two and a half odd months in a 400-point band. Events have come and gone, Fed meets have come and gone. The earnings season is, 3/4 of the way over. The budget is over. The range is not breaking. Is this going to stay a while longer, this element of consolidation?
I think so. I think, markets could be range bound. I think I can say one thing, that at least the budget cannot be a reason for, for the market to fall too much. But I think given the fact that we've seen some challenge on earnings, which in a way are on recovery mode, and given the events that we have over the next couple of months, I think it's fair to say that the markets would probably, move around in a broad range.
Okay. All right, gentlemen, stay on with us. Okay, there's a bit of a pickup, by the way, in the market. As we take this break, let's just see what's causing it.
Axis Bank.
Okay, Axis Bank. So it's the lenders taking us down, and it's the, another lender which is batting on the other side.
I think there was a lot of buzz about perhaps something on Suti stake sale being announced, and that's why you had seen that decline on Axis. I think for now nothing there, so perhaps some short covering on the stock. So that's why it's reading a bit higher, but it's really all over the place, Surabhi. So it's a day for professional traders. Perhaps the retail should stay out.
Okay, on that note, we're going to take a break. We'll be back. The conversation continues. Saurabh Mukherjee, founder of Marcellus Investment Managers, also joins in.